Jacqueline, I'll just begin with you because you're generally our bull here. After the run-up since the stress test, who do you think still has room to go here?
So specifically, we would look to JP Morgan as well as PNC, and we like the strong balance sheets, solid capital positions across the banks, especially these two.
These two, Jacqueline, stand out to you. Why? One of them is obviously one of the biggest banks in the country. PNC is more of a regional. This evaluation case, so you mentioned capital too.
You know, their valuation, we believe, is attractive, but the capital base for both of them gives them flexibility. Like we saw last week, they announced additional dividend hikes, some buybacks, especially with JP Morgan, and the dividend increase with PNC alone was very attractive. So beneath the surface there for both of them, Kelly, is really some very strong lending opportunities across the space as well.
Okay. Jacqueline, what about those points?
So as a counterpoint, we did see some pretty solid loan growth in the first quarter, and that usually tends to mitigate a little in the second quarter, but overall it's very robust for a lot of the banks, especially some that we mentioned on the corporate side. And then with respect to the rate environment, yes, we are seeing slow rate hikes. But overall, when you go back to the beginning of when the 10-year and when the 2-year and Fed funds started trading, you are looking at 125 basis points right now, but the historical average is closer to 5. So we have room to keep moving rates higher and also to keep that spread, which right now between the 210 is about 97 basis points. And during that entire duration, it was 95 basis points. So we're still we're at the mean. And even if we go forward and continue to move rates higher, which we should see because we're not in a triage mode with respect to the financial space any longer, we should continue to see a breathing room for the banks because they've been pressed against the wall, both on deposit rates as well as lending rates, that we think they'll have more room for profitability and more wiggle room for growth on the lending side, both corporate and residential across the board.